I'm Getchin Share with HomesNet Realty, and I thank you for watching. And if this is your first time on this channel, please consider subscribing and click on the bell to be notified when I post new videos. In this episode of Let's Talk Real Estate, I will go over 20 questions, multiple choice questions, designed to help you pass the Florida real estate exam. Let's get right into it. Part 17, Real Estate Investment and Business Opportunity Brokerage. Number 1, the risks associated with losses from storm, fire, or theft is referred to as blank risks. Well, here we're talking about static risk. Static risk are risks that can be transferred to an insurer, such as your property insurance. That covers things like hurricanes, fire, or vandalism, or even theft. So those are the risks that can be transferred. They are known as static risk. Number 2, when the cost of borrowing money to purchase an investment property exceeds the rate of return on the investment, the investor is experiencing blank leverage. Well, that would be known as a negative leverage. When the cost of borrowing money costs you more than the return you get on the investment, well, it would be negative. So if I borrow money from a bank at, let's say, 7% interest, and I am investing that money in something that's giving me 4% return. So you can see I wouldn't make enough money to even pay back the interest. So that would be negative. It's on the negative side. Number 3, liquidation value may be used to establish the minimum value of a business that is blank. Well, that would be a business that is failing. A business that's unprofitable, that would be a liquidation value. So we will be looking at you can simply put the inventory. It's because the business is failing, so it's not likely to continue. Number 4, a business with sales of less than $200,000 is classified as a business blank. Well, that would refer to as a business opportunity. A business opportunity is a transaction where the value is less than $200,000. Whereas, as you can see in the note there, if the transaction involves more than $200,000, it is referred to as a business enterprise. Number 5, the transfer of personal property in a commercial transaction is generally accomplished using a blank of blank. Well, that is simply a bill of sale. If you are conducting a commercial transaction and you are also purchasing personal property, such as, for example, furnishing equipment, those things will be transferred and you will receive a bill of sale from the seller. Whereas if it's a real property, you will get the deed. So that's simply what that is referring to. When you're transferring personal property, you will receive a bill of sale, simply a receipt. That is simply that. Number 6, a business broker must possess knowledge in blank and blank and blank. Well, if you're going to be in the business brokerage, you must knowledge on basic accounting and corporate financing. What do we mean by that? Well, if you're going to evaluate a business, you got to be able to see what the business is doing as far as the financing, as far as if it's making money, if it's losing money, how much, and that's what that's referring to. Because you got to be able to at least give the person, although they can hire a person to evaluate the business, but you should have a strong understanding of those terminologies. Number 7, a business broker must be able to read and understand blank, blank, and blank, blank. Well, that's what we were just talking about. A business broker must be able to understand operating statements and balance sheets. And that is your profit and loss statement and your balance sheet. What's happening with the business? Is the business profitable? Is the business making money? If so, it is likely to continue. That is called a going concern value. Whereas if the business is unlikely to continue, then we know we're looking at a liquidation value, just to tie those two things for you. Number 8, the money made in an investment is referred to as a blank. That is referred to as a return. Every investor invests their money for one purpose and one purpose only, to get a return, to keep creating more wealth. It is also referred to as return on investment. You probably heard of the term ROI. Well, ROI simply means return on your investment, and that's what this is referring to. Number 9, blank assets are those that have no physical existence. Well, intangible assets do not have any physical existence. Those are things that are conceptual in nature, such as your licenses, your IP, intellectual property, your stocks, any trademarks, any copyrights, any research and development, R&D expenses, non-compete contracts, franchises, and of course, goodwill. All those things are conceptualized. There are ideas that give your business value. Those are things that give you business value. So let me explain that a little bit. Let's take licenses, for example. People presume because you have the certificate itself is simply evidence that you have met that state's requirement to practice such profession. But if you lose that, you still have the knowledge, but the point is you cannot practice without the license. So that has value. So goodwill, a business that has been in existence for a while and that has a very good reputation, well, that is goodwill. People know that they are delivering what they claim to deliver, the services that they're claim to provide. All those things are intangible assets, whereas tangible assets are things you can touch, feel, see. The building, that is a tangible asset. Furnishing, that is tangible. Equipment, that is tangible. Anything that is tangible, you can touch, you can feel. Number 10, an instrument similar to a mortgage that is used to secure payment due on the sale of personal property in a commercial transaction is called a blank. Well, that would be a security agreement. When you're buying real property, you are giving the bank a mortgage. Whereas if you're buying personal property with money borrowed, and you are giving the bank a security agreement. It is basically giving the bank a lien on your personal property, the furnishing, the equipment, etc. Let me take a moment to say thank you for supporting. And if you have not subscribed, it's very simple. Just hover over that picture at the bottom of your screen and click subscribe, and you can check the bell to be notified when I post new videos. Number 11, which assets found with a business brokerage are not usually found with a real estate corporation? Well, what are they saying here? Let's take a look at the wording. Assets found with business brokerages that are not found in a real estate corporation. Well, let's look at it. Goodwill and personal property, that is not anything that comes with a real estate corporation. Whereas with a business brokerage, if you're selling a business, goodwill of the business matters. It adds value to the business. And if the business has a lot of furnishing, a lot of inventory, well, those things, if they are being sold with the business, well, they may be separate because those may be considered personal property. So therefore, you can see a business has different things, whereas a A real estate transaction, well, fixtures might be something that comes with real estate. Timber, meaning trees, those things might come with the real estate. Any existing leases, those things may come with the real estate transaction. So you can see goodwill is not one that would be sold with a property. Number 12, complete the sentence. Real estate investment analysis is a determination of the extent of which certain real estate investment will fit an investor's blank. Well, real estate investment analysis is really determining the investor's objective, because you're looking at what is it that the investor is trying to accomplish. And as a professional, your job is to accommodate that and bring it to life, bring it to existence, right? So, or help the investor bring that to life. And you can see I highlight the words. Investment analysis is a determination of the investment that will fit the investor's objective. What is the investor trying to accomplish? Number 13, which condition is most likely to occur when the demand is less than the supply of available housing? Well, let's take a look at this. If supply is more, that means there's an abundance of housing and less of a demand. So we know we are in a buyer's market. A buyer's market is where supply oversees demand. So they're just saying that in a back way. So demand is less than supply. So that really means supply is abundant. So there's more supply than there are people willing to buy. That is a buyer's market, folks. Which type of risk is the risk that an investment property cannot be bought or sold quickly enough to prevent losses? Well, that would be a matter of liquidity. So that would be liquidity risk. You understand by now that real estate has a liquidity risk factor. What do we mean by that? Well, while real estate can be conveyed, can be transferred rather quickly, all you have to do is sign a deed, get two people to sign it, two witnesses, and that's it, and transfer it over to the person you want to give it to. However, if you are selling a piece of property, whoever's buying it, because real estate is pretty expensive, that is a substantial expense. So most people do not have that kind of cash to buy it. So therefore, they'll have to get a loan to purchase your property. That process, the process of qualifying both the property and the buyer, may take several weeks. And you can see, if you are a person who's looking to cash out, liquidate your asset quickly and get liquid cash, cash is the most liquid thing. So if you are selling a piece of property, you can see how a piece of property may not be as liquid as, let's say, for example, selling your stock. You sell your stock, within a matter of a couple of days, your money is in your hand. If you are selling a real estate property, well, it may take several weeks, if not several months, to sell. Number 15, what term is used to refer to the use of borrowed funds to finance the purchase of real estate? Well, that is a matter of leverage. When you borrow money to invest using, we like to call it OPM, other people's money, using other people's money to leverage. So the term that you use to refer to money you borrow to purchase real estate, that is called leverage. You're leveraging. Number 16, what is produced by applying the loan constant to the loan amount? Well, that would be the mortgage payment, because when you take the loan constant, you multiply it by the loan amount, that will give you the monthly payment. Number 17, current tax laws allow owners of investment properties to depreciate a portion of their investment over what period of time for what type of property listed. So here, The answer would be insert choice A. That would be 27.5 years for residential properties, and you get to depreciate non-residential properties for 39 years. That is the concept here. I know back when we refer, I want to make sure you understand. Yes, when we talk about residential property, we're talking about any place where people lay their head at night and go to bed, go to sleep. That is residential, irregardless of how many units. It could be a 250 unit building. If people sleep there, that is residential property. It is not residential sales, it is residential property. Whereas a, a building that is an office building, that is a non-residential because people are not permitted to sleep there. So you can see that's what they're referring here. So if you're an investor, you purchase a building that is a residential property, well, you get to depreciate it over a period of 27 and a half years. And if it's a non-residential property, well, you can depreciate that over 39 years. Tonight, number 18. What is a tax shelter? Well, shelter means to protect. So here, tax shelter is a method by which you invest your money and you reduce your tax liability. So answer choice A would be the correct answer here. A legal method of decreasing your tax liability. The key words here is legal method. So tax shelter is using the tax code and using that. And what I'm saying is talk to a CPA. That is their job to advise you how to invest your money, where to invest your money to minimize your tax liability legally. Number 19, long-term capital gains can exist when the property has been held for more than how many months? Well, anything that is held for more than 12 months is referred to as long-term capital gains, meaning money you make off of investment over 12 months. That is capital gains. And if it's less than 12 months, that would be referred to as short-term capital gains. Number 20, depreciation can be taken on all of the following except, well, remember, the land is never depreciable. The land is never depreciated, so that would be the land. Everything you see there, the office building can be depreciated over 39 years, a warehouse over 39 years, a garage over 39 years, whereas the land is always deducted, is always removed. So if the land has a value of 20%, you have to account for that, take it out first before you depreciate what remains. So that is all, folks. Again, I thank you for watching. Please don't forget to subscribe, share, comment, and like. And yes, don't be surprised if I post the next 3. I believe that this is 17, 18, 19, 20. So 20. Look forward for part 20. That is your 10 multiple choice questions that are dealing with math only. Part 20 is purely math. As you can see, what I'm trying to do here, I'm trying to keep it very simple. Give you what you need. Get your 90 points first. Okay. Get your whatever number of points you need. 75. Get those first. And then part 20, we will do all math. So that way you can focus on that and only that. And keep in mind, math is only 10. And yes, we will do 20 math questions. So look forward for those. And I will try to get those out to you as quickly as I can. However, I am really, really pressed for time, and I'm doing my best to put these out as fast as I can, but time is of the essence, and I have a lot on my plate, so that's why. Okay, folks, thank you, and I see you on the next video. Until then, please have a blessed and wonderful day. By the way, make it productive. Bye.